Hi, and welcome back. We've got a big week ahead of ourselves. As you can see, my portfolio was huge this week. On the day, clearly down a little bit. Not a big deal. If I zoom out to the week, we can see up just under 5% on the week. Huge gains. And in this video, I'll talk about what those gains came from, why I'm really excited, and the investment that I made this past week. So I put $100 in this week, but even with that, I'm up $130, almost 5%. The vast majority of that had to do with Bitcoin. So the one stock that I did buy this week is I bought one share of Walmart for about $120. I think that's a great investment. I have an article pulled up about why Walmart is a great stock to have both now and in the long run. It's a stock that is great when the economy is not doing well. They talk about in this article how in 2007 to 2009 the economy tanked, but Walmart as a whole did awesome. There's a lot of reasons for that, but clearly the big news here is Bitcoin really saved me this past week. So we can see on the week right there. On the month, we are up about 3%. All time, I'm still down, but it's looking a lot better than it was a couple weeks ago. So as we can see here, just went off a cliff because of Bitcoin a couple weeks ago. I was up here as high as 29.57, so up almost 2%. And right here, I'm down about 1%. But again, I'm not super concerned about that because Bitcoin has performed so well in the past week. So we'll start again with SPHD as I do almost every week. It's my largest holding, S&P 500 ETF. Graham Stephan actually posted a really interesting video this week talking about what some people think is coming, an index fund or ETF bubble. He talks about how almost 50% of investments in the stock market right now in the U.S. are in some sort of index or ETF. And basically, I'll go ahead and explain what he talked about in that video. And so the biggest thing that he talked about is that people are concerned because 10 years ago, only about 2% of money in the stock market was in index funds or ETFs, and it's up to 50% now. Warren Buffett has talked about why he thinks that people should be invested in ETFs. The biggest reason there is that when you're encompassing the whole market, you're really getting what the market is doing at that current moment. And there are estimates that between 92 and 95% of professionals in the financial industry can't outperform the market. There's just too much going on. There's too many companies that are doing well and too many companies that aren't doing so well. So on the week, we can see that it's down. On the month, it's down, but it's pretty stagnant overall. I've showed this before, but over the past 5 years, we're kind of seeing a stumbling block right here where it's just kind of moving up and down and everything's kind of the same. And we can see that in the market as a whole, and especially in the S&P 500. But again, I'm not concerned. I'm up $3 all time, and you're sitting there going, well, that's nothing. You know, you've got almost $350 invested in there. But again, it's the monthly dividend on this one. So I'm set to make tomorrow morning, actually, I'm set to make just about $1.20 on this one. That monthly dividend is huge because it's consistency. That's really what I'm looking for in that stock. VTI is my total stock market, so SPHD is my S&P 500. This is going to encompass the stock market as a whole instead of the S&P 500. So as you can see, the stock market as a whole has done much better over the last month. But in the past 5 years, we can see kind of the same thing. The past 2 or 3 years, kind of the stagnant growth where we're seeing up and down movement. But again, I'm not super concerned about these. I think that even if the stock market does hit a stumbling block in the long term, this is a portfolio that I'm looking to keep in the long term. And those dividends will be huge. So this one's paying, I want to say, around 4% dividends per year. And this one's quarterly, but it is definitely something that I want to keep in my portfolio. Now, Vivint Solar is another one. I've talked about it before. They've got an earnings call coming up this next week, and I think that'll be huge for them. As we can see, they've consistently missed their earnings expectations, but I've covered in my previous videos that they're refinancing their debt, and they've got a lot of good things going on. And that's why we see a 100% buy rating from these analysts at Robinhood. All the research that I've done on Vivint Solar says that it's a good keep in the long run, and I'm just going to stick with that. So as we can see, 42 shares. My average cost is up to $6.90, so not up much at all. I was up a lot there for a while, and when we go to this 3-month chart, we can see exactly why. The 1-year chart, we can see it was a really steady climb here, and then that last earnings call at the beginning of August is really what set them into this almost downward spiral. But I don't necessarily look at it that way. Like I said, I think this next earnings call is going to be huge for them to see if refinancing that debt has made a difference and what kind of difference it's going to make in the long run. So Agilent has been decent. Coca-Cola has been decent since their earnings call. I talked about it last week. Basically, their CEO came out and said that while they did beat their earnings expectation, they're looking at less earnings going forward. They are decreasing their expectations, but that's okay. Microsoft right here, $143, and they reached an all-time high this week. Great company to invest in. As we can see, 94% buy rating. Everyone is huge on Microsoft right now. The cloud stuff that Microsoft is working on is amazing, and they're seeing really high returns on that. Everything that I've read says that all of these companies with high cloud infrastructures, Microsoft, Amazon, Google, whose stock is under Alphabet, all of them should do well in the long term as that cloud kind of spectrum in the market as a whole continues to increase. There's more room for everything. So again, up 200% in the past 5 years. And so this 15% gain that I have is awesome, but at the same time, man, oh man, if I'd invested 5 years ago, that would be a terrific pickup. Logitech has performed decently well. As you can see, not a great day in the market for me today, but not a huge deal. Sony's been a little bit up and down, not too concerned about that. We'll go ahead and take a look at Walmart and this article that I have pulled up. So I'm down just under or just over 1% on Walmart in the last week, but I'm not super concerned about it. As we can see on the month, not looking great. On the year, it is looking great. And in the past 5 years, up 50%. Anybody will take that? Now, what this article says is very interesting. So the way that they describe it, as you can see, Walmart is strong and safe. Strong and safe. I mean, that's two words that are huge when you're talking about the stock market. And in this article, they talk about why. So right here we can see they've established themselves as an irreplaceable and important player in the retail market. And really the way that I look at this is that Walmart is a competitor that can actually hold their own against somebody like Amazon. So as we've seen a ton of brick and mortar retailers go out of business or struggle due to the advent of these online purchasing platforms, Walmart should be okay because they're the largest retailer in the world. Their profit margins are very thin, but at the same time you can buy everything at Walmart. There's a Walmart just about everywhere you go in the world. And in this article, they talk about that being a really strong suit. They know basically where they need to be successful and where they need to focus their efforts on, and they've continued to do so. So here they go on to explain why Walmart is such a good investment. And so, as we can see, the U.S. economy has slowed meaningfully over the past few quarters, but this slowdown is almost entirely due to a rise in corporate uncertainty, which has caused a drag on CapEx and CapEx-dependent industries. If corporate confidence turns around, so will the economy. We know that Walmart is something that's going to do well regardless of how the economy is doing, but clearly when the economy is performing well, when the U.S. is doing well, Walmart is going to do well as well. So here they go on to talk about some hypotheticals about how a 3 to 4% increase in the market year over year would be huge for a company like Walmart, and why that's such a big deal. And then this is where I find it most interesting. They talk about Walmart's safety net, basically. And so let's see if I can find it. Here we go. So it says, more than just a theory, history says this is what happened. Look back at the last recession. From the market's peak in 2007 to its trough in 2009, the S&P 500 plunged, but Walmart rose over that stretch. So the conclusion they come to, if the U.S. economy does spiral into a recession over the next 12 months and stocks crash, Walmart stock could be fine. And I think another way to explain this is that because Walmart's goods are so cheap, because they're not going for the niche market, they're going for kind of the everyday American, the thing that everybody needs. In a recession, this is really a place that people are going to shop because it's cheaper, because they know that it's decent quality, because they know that they can get Walmart's goods anywhere. It's huge. I think that it's a great investment, and I'm really looking forward to A, seeing how Walmart does in the long run, and B, seeing if I can increase kind of my position on Walmart, perhaps buying more in the future. Now, Looking at some of these other ones, Pfizer, I talked about it a few weeks ago. They're making a little bit of a comeback, doing a little bit better. Over the last 3 months, they were down to $34. That last earnings call really beat them up. But I'm looking at increasing my position because they pay such a high dividend, and there's really no reason to think that Pfizer is going to struggle in the future. So as we can see, a very high hold rating, but some people are saying continue to buy. But I think that this is, the pharmaceutical industry, and especially Pfizer, can succeed in the future and will succeed. And that dividend really is huge. So down 8%, not totally concerned about that, but it is something to look forward to. And some of these smaller ones we've talked about, AT&T, they've done decently well. Corning will be an interesting one to follow in the near future. That Four Corners Property Trust, my REIT, I am pretty happy about that and looking at increasing my position on that. But Bitcoin, this is what everybody came to see. As you can see, down on the day, but if we look at the past week, that is huge. So last Friday, Bitcoin was up, I want to say almost 30%. And if we look even at the last month, that's huge. The troublesome part is when we go 3 months or the last year, is that we're still in kind of this downward trend. But as I talk about almost every week, that Bitcoin halving coming up in May should be huge, and it's something that I am looking forward to seeing. So when we go out to this longer 5-year graph, we can see this big bubble at the end of 2017 that everyone was so excited about. And we saw this downward spiral, downward, and then a little bit of an increase here. I shouldn't say a little bit. It was down to about 3,000 and peaked at just about 13,000 up here in July. But that being said, I think there's a lot of room for Bitcoin to grow in the future. And I am really excited about that halving. So, just a couple other things I want to talk about. The first of which is that clearly I always do my videos on the full computer browser on Robinhood. If you'd like to see me do a phone like some other people do, I'd be open to that. The reason that I like doing the computer is just because I think the graphs are a little bit better. So especially if we look at the 1 month, we can see the hourly on Bitcoin, where on the phone it only shows per day, so it's not quite as exact. I do use Robinhood most of the time on my phone, but for these videos, I've tended to stick with the computer browser, again, just because those graphs are a little bit better. But if anybody would like to see something a little bit different, I would be open to that. So thank you, and I'll be back next week.